Hi there, in this video you'll find out the fair value of Microsoft stock, based on analyst estimates and then on my own estimates. As you can see, the stock price has almost doubled in the last 2 years. The market cap is about 2.3 trillion and Microsoft pays a dividend of around 0.8%. Now let's go to valuation. If you want to value this business, you need future earnings. In this image you can see analysts' earnings, which are expected to grow from 72 billion to more than 100 billion by 2026. And revenue is expected to grow from 200 billion to almost 300 billion. Now you take these numbers and calculate the final fair value. For a 10% return a year, the fair value will be about 1.8 trillion. If you add the cash on hand, which is about 104 billion, the final fair value will be about 1.9 trillion. And you compare that with the market cap, which is about 2.2 trillion or almost 2.3 trillion, the stock price is a little bit overvalued. Now, if you choose a lower return, let's say 6% a year, then the fair value will be about 2.1 trillion. Plus the cash, 2.2 trillion. So the current price, you can expect an annual return of around 6%. Now let's see my own estimates. Same thing, for a 10% annual return, I used their earnings of about 65 billion, which are expected to grow by 10% in the first 5 years and then 10% in the last 5 years. The fair value would be about 1.1 trillion. Plus the cash, the final fair value would be around 1.2 trillion. And the market cap now is around 2.2 trillion. So the stock price is quite expensive compared to my final fair value. This is the normal case. The risk, if something bad happens with Microsoft, let's say the growth slows after 10 years, in the first years Microsoft grows by 10% and then the growth rate slows by 5%, then the fair value will be around 700 billion. Plus the cash, 800 billion. And if you compare to the market cap, this means you can have a decline more than 50% if something bad happens with Microsoft. Now, the reward, if Microsoft grows by 15% for the next 10 years, then the stock price is fairly valued for a 10% annual return. So you have 2.2 billion from their earnings plus the cash, which equals 2.3 trillion. Compare that to the market cap, which is about 2.3 trillion. You can expect a return of 10% a year. But this is the gray scenario. If Microsoft grows by 15% every year. I don't know if that will happen, it's unlikely. But I expect the normal case, where Microsoft will grow by 10%. Now, if the multiple is higher, let's say 30%, then the fair value will be about 1.8 trillion. So still, the current market cap is too expensive. Now, if you want to know more about Microsoft, why they do, you can look at its segments and see their main products, how Microsoft makes money. As you can see in this image, a large part of their revenue, of around 34%, comes from server products and cloud services. Maybe you know that Windows Server. Then Office products, such as Excel, PowerPoint, Access and others. Then Windows, which is the main operating system for laptops and desktops. Gaming, LinkedIn, search and advertising, enterprise services, and devices. Now, most of the growth will come from server products and office products. Of course, they also have some opportunities in gaming, but I don't have a moat in that segment. Let me show you the opportunities for server products. You can see in this image the server market share worldwide by operating system. As you can see, Windows owns 72% of the market, followed by Linux, Unix, and other operating systems. Note that this operating system is for servers, not for laptops or desktops, the servers that are used in cloud computing. And if you look at this industry, is expected to grow by 12% from 2022 to 2029. Another opportunity for Microsoft is cloud computing, which is expected to grow by 13% from 2023 to 2030. Microsoft has a market share of about 23%. In first place is Amazon with 32%, Microsoft on the second place, and then Google, Alibaba Cloud, and other players. We can also see their performance over the last 4 years. Microsoft has continued to gain more market share in the last years. Amazon has maintained its position, Google has also improved its position, and other players are about the same, and IBM is declining, and others. So Microsoft has many opportunities to grow its business. Now the problem is if they can maintain their profit margins. You can see this image that Microsoft has had over 20% in profit margins. This is an amazing performance. I don't know if they can continue this way, but if they do, the stock price will continue to rise. But keep in mind the fair value. As I said, based on analyst estimates, the final fair value is about 1.9 trillion for a 10% annual return. If you are pleased with a lower return, then you can, let's say 6%, then you can invest in this business. But keep in mind that you need a margin of safety and a higher return, as inflation is so high, of around 5%. Based on my own estimates, the stock price is extremely overvalued. If you want to invest with a margin of safety, then you can use my own estimates. If you don't want to listen to me, then you can use analyst estimates, where the fair value will be about 1.9 trillion. So it depends on you, if you want a margin of safety or not. And if you have any questions, please let me know in the comments.